Now on BBC News, the latest from New York and around the world. Business Today.
Live from New York at the opening bell, this is Business Today. Stock markets ignore the shutdown as Wall Street opens higher off the back of fresh record highs. And it's Jobs Friday without the monthly jobs report. The government shutdown delays the data at a pivotal moment for the economy. Plus, crypto is here to stay. The boss behind the world's largest stablecoin hits back as we ask him if Tether reserves are really backed by cold, hard cash. Welcome to Business Today, live from New York. I'm Michelle Flaring. We start in Washington, where the world's largest economy is still stuck in shutdown. Yet again, the US Senate is gearing up for another attempt to break the deadlock before the weekend, but there doesn't seem to be much expectation of success. And take a look at the markets. They are all in the green, moving higher. That is despite the uncertainties and threats from the White House of mass layoffs. Investors seem to be looking beyond the shutdown, trying to extend their record run. There you can see the Dow already up 100 points. Still, one casualty is the closely watched monthly jobs report. It was due out an hour ago, and it hasn't been published. Now, this is a big deal in the world of economics and for policymakers. It is a key indicator of the health of the US economy, giving insights into how confident companies are about hiring. And remember, employment data also helps guide the central bank on interest rates. So no report means no clarity, just more question marks for investors and policymakers. Well, let's bring in Glenn Smith, Chief Investment Officer at the investment firm GDS Wealth Management. Glenn, what is the impact when economists don't have access to this data?
We think they look at what the tea leaves say, and at this point, it looks like it's going to be unchanged unemployment. That being said, we've kind of seen this movie before. There have been 20 times we've had a government shutdown since 1976, and on average, the market's gone up 1%. And the longest government shutdown in 2018 was 35 days, and the market actually jumped up 11%.
I mean, this is still a crucial point for the economy. If you look at normally we've been talking about the jobs market, there's been a lot of focus on this report because it has been showing signs that there is slower growth on the jobs front. At the same time, you've got inflation creeping up. So the central bank right now is flying blind, isn't it?
A bit, and they're extremely data dependent. At this point, we think they're going to cut rates 25 basis points this month in October and 25 in December. As more information comes out, I think they'll pivot and adjust as the facts change, their opinion will change. But historically, this is not a big deal to have a government shutdown for a matter of a week or so.
Meanwhile, markets record highs. Do you think they can sort of seal the deal and make it 5 days in a row?
We do. We think there's a ton of opportunity, especially if we do get that rate cut. Over the last 5 years, the S&P 500 is up over 100%. But if you look at the smaller stocks, the Russell 2000, they're only up about 65%. So if we get a bit of a cut this month and in December, we think this rally could continue for quite some time.
But what about the warning from the boss of Goldman Sachs just today, suggesting that maybe the AI boom was kind of overdone?
Yeah, I heard him talk about that. And we'll see. Time will tell if it is overdone. I think there's pockets within the AI world that are getting frothy. And we're seeing signs of circular financing. NVIDIA just invested $100 billion into OpenAI. And that's circular financing, when the supplier invests in the customer in order for the customer to continue to buy from the supplier. And historically, this does lead to a bubble. So I would be very leery if I'm an investor to put new money into work at AI at these levels.
Glenn Smith from GDS Wealth Management, thanks for joining us this Friday.
My pleasure.
Now, as we mentioned, the US government shutdown is in its third day, and there's no sign of either side backing down. We are expecting in a couple of hours the Senate to vote on a short-term spending bill to try to get things moving again. This is, of course, the first shutdown in 7 years. So let's take a quick look at some of the numbers behind the standoff. An estimate from the consultants Ernst & Young says that each week of the shutdown will cost the US economy 0.1% of economic growth. And that equates to about $7 billion because of reduced pay for furloughed federal workers and the reduction in demand across the economy. In the last couple of hours, the government's Office of Management and Budget Director has said $2.1 billion in Chicago infrastructure projects, well, they have been put on hold to ensure funding is not flowing via race-based contracting. And hanging in the background of the failure by Democrats and Republicans to agree on spending plans is a US national debt, which has risen to $37.5 trillion, and some argue is unsustainable. So what comes next? Henrietta Treyz is co-founder and director of economic policy at Vader Partners, which advises investors on political events in Washington. She was with us earlier this week at the start of the shutdown, now on day 3. Henrietta, what do you think comes next? How do you think this Senate vote will go?
Well, this Senate vote is destined for failure, and I would be very surprised if lawmakers were able to break this logjam through at least Wednesday of next week. We're starting to get initial indications of little working groups, which is exactly what you want to see to end this impasse. But my expectation, based on the lack of urgency that this administration feels and the very real push from the Democratic base to show some sort of gumption going into this shutdown and to challenge the Trump administration that's been being very aggressive for the last 9 months, is that this is going to last at least through Wednesday of next week, perhaps well into the future.
What do you make of the White House? They've cancelled, or they moved to cancel infrastructure projects in New York on the first day of the shutdown. Today, they've announced they want to cancel another infrastructure project, this time in Chicago, all while the shutdown is going on. I mean, how does that play? Is this unprecedented, or have we seen this before?
It is overtly partisan. My concern for the Republican conference is that the only reason they have a majority in the House of Representatives, which, be mindful, is extremely small, they only have a 2-seat majority. The reason they have that majority at all, though, is because of the president's gains in those very blue states that he is targeting. So whether that's in New York or in Chicago or Illinois, those states are where the Republican conference has picked up votes since the last election. And so penalizing those cities is going to have a rebound effect and make them appear as though they're unable to govern and being punitive to those very members who elected them. So that's a big future problem for the administration if they're not careful.
And what about layoffs? We've got the union that represents federal workers suing the government essentially over threats about potential layoffs. Again, when you have a shutdown, you normally get furloughs. You don't necessarily get layoffs.
That's right. And the employees who are furloughed, which is about 750,000 people across the United States, are in red and blue states. They're all over America. And those folks are going to stop getting paychecks next Friday. So on October 10th, this shutdown goes from just a fun, escapade to a real problem because people are stopping getting paid. And that happens for the military on October 15th. So this starts to have a compounding effect. And for the employment picture generally, they're already halting employment. So these public sector folks can't just go get a job in the private sector. That market is stagnant because of the tariffs and immigration policy.
So we start to see it sort of rippling out into the broader economy. Henrietta from Vader Partners, Henrietta Treyz, thank you very much for joining us on Friday.
Thank you for having me.
Now, crypto is here to stay. That is the message from the boss of Tether, the company behind the world's largest stablecoin. Stablecoins are digital tokens that are pegged one-on-one to the US dollar, giving traders a way to move money in and out of volatile crypto markets. Tether is raising money from investors that could value the firm at $500 billion. However, it has long drawn scrutiny over transparency and whether its tokens are truly backed by real-world cash reserves. My colleague Steve Lai sat down with the CEO of Tether, Paolo Ardoino, and asked him about some of these concerns and the Trump administration's support for the crypto industry.
I have 500 million people that I need to protect from few bad apples. And I'm going to dedicate all the resources that I have to make sure it happens.
Now, I know one of the questions that you've been asked a lot is about the verification and the transparency of these accounts, whether or not they've been verified by one of the big four accountants. Is that something you're still looking to do, to have your accounts audited?
We have been asked for an audit. In the previous administration in the United States, Senator Warren and others were very, very strong to communicate to auditors, you should not touch crypto companies with a 10-foot pole. The OCC was debanking crypto companies. And so now things are changing. Right now, we also hired a new CFO, and his main task is actually going through an audit. Thanks to this administration, now auditors understand that crypto is here to stay.
And how has this change in the administration impacted you or impacted Tether?
We have been trying to explain for such a long time the importance of this technology, and the previous administration was not really open to crypto in general, not only to stablecoins. And now we saw Trump actually to be very open, and we participated as a company to the educational efforts on what stablecoins are that led to also the Genius Act. It's a very important piece of legislation because it provides the guidelines to stablecoin issuers on the type of reserves, the requirements, and all that.
You must appreciate that from the outside it could look a little bit contentious having a private company or a company such as yourselves involved in crafting legislation that would then directly benefit you as in the outcome.
Look at what happened in the United States. Every single bank came out saying, I'm going to do a stablecoin. So actually created much more competition.
And obviously that has accelerated the change in position of the Trump administration into the crypto industry in terms of the scrutiny that was on companies such as yourselves before, and that has gone completely the other way. In fact, the president has his own family involved in cryptocurrency businesses. Do you see that as being a conflict of interest?
I think that the children of the president should be able to do whatever they want. They're still normal citizens and civilians. I appreciate that it's important to set guardrails and make sure that everything is done properly. And when you have that, then it's how an industry should be.
The Tether CEO speaking there to the BBC Steve Lai. Now, some breaking news reaching us from the UK in the last few minutes. The car maker Renault has confirmed that some of its UK customers has had their data stolen in a cyber attack that targeted a third-party data processing provider. There's no details yet on how many people have been affected, but the company says no Renault UK systems were hacked. Also, the Japanese brewer Asahi has confirmed that a cyber attack is behind its production stoppage and says that it still doesn't know when it will be able to restart. The attack, which began on Monday, means many bars, restaurants and shops are running low on supplies of many of the country's best-selling drinks. The company says it's working with outside specialists to try and repair its systems. And the social media app TikTok had its operating license suspended by Indonesia's government. It's reported to be the company's second biggest market with more than 100 million users. The authorities say the company has refused to hand over data about accounts that were used to live stream protests during August and September. TikTok says it respects the law and is working with the government to resolve the issue. And that's it from us. Thanks for watching.